Hi friends, I'm Rebecca. Welcome to Squintillions.
Today we're going to walk through how to do covered calls on the E-Trade website. The example I'm going to use for today is Intel. I'm going to go in the search box and type in the ticker INTC and click on Intel, which will bring up Intel's information. And on this menu here, you can go to Options. This brings up the options chain. I'm going to look at the monthly options for Intel, and I want to do a covered call, so I'm going to change this box to say calls only. It's currently trading around $48. I'm going to look at a strike price around $55. So let's look at the next monthly option, which is April 14th, and we see at $55 strike price that the premium is going to be $4 or $5. That's not quite enough money for me to make it worth writing the call. So I'm going to go further out in time, and I'm going to go to the next monthly option choice, which is May 20th. Now with the $55 strike price, we see the bid is at $41 and the ask is at $43. That's a better premium for me, and it's worth the time for me to write a call. Some people like to write monthly calls, but I'd rather write a call a little bit further out and get that big chunk of money and not have slightly smaller amounts of money and have to write multiple calls. That's just a time management piece for me. I also like the look of the $57.50 strike price. This is decent to get a $21 or $22 premium. So we'll look at what the risk is, and I'm going to use the options analyzer for that. So to get to the options analyzer, you just need to scroll down a little bit, and it'll show you the tools that they have. I'm going to click on the options analyzer and open that in a new tab. In this box, I'm going to type in INTC and click Add. I am going to unselect this because it seems to interfere. Under My Strategies, I'm going to select Call. Under Order, when you're writing a covered call, you're always doing Sell to Open. For the expiration date, we're going to go to May 20th, and we're going to look at the $55 strike price first and click on the Analyze button. This shows our chart, the profit loss graph. It doesn't quite line up with $55, so I'm going to move the slider over to 55. Well, $54.99 is good enough. So right now it's showing the expected probability is 14% chance that INTC will close above $54.99 on May 20th. That's okay for a risk. I want to see what the risk level is now for the $57.50. So go back up here, change the strike price to $57.50 and click Analyze again. Slide this down a little bit. And so now the expected probability is an 8% chance that INTC will close above $57.44. I can move it over a little if I wanted. Probably isn't much of a difference. $57.51, still 8%. So I think I'm going to write my call to be for a strike price of $57.50. I'm just being conservative on this one because I don't really want to lose my Intel shares, and $21 or $22 is pretty nice for 5 or 10 minutes of work. I'm going to go back to the tab that had the quotes on it. I'm going to click on the bid price at 21. So that brings up your options order form. Just make sure everything's right. You're doing a call. You're doing sell to open. The quantity is 1 call, which covers 100 shares. So you should have 100 shares of Intel in your account to write this call. Expires May 20th. The strike price is $57.50. So I have a choice to make here as to what my limit price should be. When we were doing the analyzer, the bid price was at 21, and now it's showing 20 as the bid price, and the ask is 22, and the price has gone down a little bit to $47.90, and it was closer to 48 before. I think it might fluctuate back up to 48 later in the day. So I'm going to put my limit price at the same as the ask price at $22. And I'm hoping that by the end of the day, the price will go up enough that it hits this limit price and I will sell this call. And if it doesn't sell today, it doesn't matter. I'm going to actually set this order good for a few weeks and we'll see how it goes. So now preview the order and then always reread what you're doing before you place your order. Okay, we've got Intel. Make sure you have the right company and that you haven't accidentally typed in the wrong ticker. Your action is sell to open, one contract of Intel. The expiration date is May 20th. The strike price is $57.50. That means if the stock price is over $57.50 on the expiration date at the close of trading, then your shares will be assigned to somebody else. The shares will go out of your account. They will sell for $57.50. You will keep your premium, which I set as $22 minus the commission. And I've set this order good until April 14th. I will check back on this order. If nothing's happened with it by the end of the week, I might readjust it. So now I'm going to place the order. Your order was successfully entered during market hours. So now I just wait to find out if it goes through. And I'll get a notification up here that will show when the order has gone through. I did receive notification later that day that the Intel call was sold. It went through when the Intel stock price was at $48.12. Now, I've done a whole video explaining all about covered calls and my strategy for writing covered calls previously. So if you didn't understand what I was talking about during this video, please watch my previous video. If this video was helpful, please remember to like the video and subscribe for more content on personal finance and personal growth here on Squintillions.